Good morning. Hi, this is Dale from Loan Cabin here today to talk to you about asset depletion again. I've talked several times about this subject, but I keep receiving inquiries and questions about it. So I'm here again to reiterate what we can do, and maybe it'll fit and work out for you. I have an attorney here in the Chicago area who's thinking about purchasing a property in Florida. The property would be a second home. I'm pretty sure that an asset depletion loan can be done on a second home, and how that would work is this gentleman is looking to pay $400,000 cash for his property in Florida. And the nice benefit about this program is instead of emptying all the cash that he has available to buy that property, leverage that cash into an asset depletion loan. So what we can do, simple math, if we have a $400,000 purchase price, let's just say because it's not owner occupied, we're going to go 70% loan to value, which would be a $280,000 loan. So that's number one. So he has $400,000 in the bank. He would meet the reserve requirement, which is 110% of the loan amount. So roughly $310,000, let's say. So that's number one. Number two is the $400,000 could be divided by 60 months. That number could be used as a qualifying income in addition to maybe any other base wages that he has, salary, for example. So those are two things to keep in mind on an asset depletion loan before you go and pay cash, if you don't want to pay cash and you want to use your money elsewhere. Secondly, I did recently close an asset depletion loan for a gentleman in his late 70s, retired, who was contemplating a reverse mortgage. He had roughly $4,000 a month between pension and Social Security, had an existing home that he has not sold, and was looking to buy a townhome in the same town. The issue was, on paper, he didn't qualify. You know, he shows $4,000 a month and he has a mortgage. He can't handle 2 mortgage payments. The nice thing about this gentleman, he had an investment account that had well over 6 figures. We were able to take a $315,000 purchase price. He had more than 110% in that investment account. We took that number, divided it by 60 months, so we came up with like $7,000 a month. We added his pension and Social Security, which put him over $10,000 a month. And then he was able to buy the house that he's now in while adding in the existing mortgage of the house that he has not sold. So it gave him the leverage to move out. He's currently in the process of getting ready to list the current home, but he thought he had no deal that he was going to have to pay cash. So really keep in mind on these programs, there are opportunities out there for you if you investigate it a little further. So number one, you should have 110% of the amount you're going to finance. So if it's 80% of $300,000, $320,000 is the amount financed, so add 10% on top of that. You have to have $350,000. The reserves can be taken from IRAs, 401ks, existing stock portfolio accounts. If you own other real estate and you have equity in that real estate, we'll do a quick AVM, which is a quick assessment of the property value, and take the equity out of those properties and lump it in with the other assets into the total calculation. So it's a great program, and before you go pay cash or maybe do like a reverse mortgage, for example, if you're older with a larger down payment, this may be a better option for you. If you have any questions, feel free to call me at 630-479-2719. My email address is dale, D-A-L-E, at loancabin.com. Please like this on your social media pages, Facebook, Twitter, and have a great day. Thank you very much.